are going to be asking how environmental objectives are being incorporated into the UK's capital markets. And to discuss and introduce our panel, I'm very pleased to welcome Mike Carter, who's a Senior Policy Advisor at Innovate Finance. Mike?
Thanks, Rashi. Well, we've heard about what's happening with SMEs. How are small businesses being helped on their net zero journey? Now we're moving upscale. As Rashi said, we're looking at how do big businesses get help in their funding journey, and that's usually through the capital markets. And so what's going on in the capital markets to help the journey to net zero? I think most of us don't really know much about that because it's locked away behind stock exchanges and banks and asset managers. So we've got a great panel here today to help us explore that, who are covering the whole spectrum for capital markets. So I'm going to kick off by asking everyone to introduce themselves, starting with Anand.
Hi, I'm Anand, co-founder and CEO of PrimaryBid.
And I'm Julia Hoggett. I'm the CEO of the London Stock Exchange.
Good afternoon all. I'm Hugo Davies and I'm the Chief Capital Officer at LendInvest.
Thanks everyone. So we're covering the whole spectrum here. Julia's business is running the markets that are delivering this. Anand's business is helping to deliver retail investors into this market. And Hugo's business is actually taking advantage of these markets in delivering to the end users a product that he's going to fund out into the capital markets. So to set the scene and to kick off and explain what has actually been going on in the capital markets, Julia, can you tell us, the stock exchange is at the heart of what's going on here? What has actually happened? What's the framework around green capital markets?
So I hadn't realized that this was going to be a handheld mic because I have a challenge, which is that I actually have a hand signal or a hand gesture that I tend to use to represent this. But if you think about it, the way capital markets function, have functioned for hundreds of years, is that we have an audit standard, we have an accounting standard, we have a disclosure standard, and we have research capability, etc. All of that maps through to understand what I would describe as the net present value of future cash flows, because I'm a fixed income jockey, so I always think about it through that lens. The simple reality is that one of the things that COP26 did that people didn't really notice, because it is in the weeds and the wonkery, is that actually we've created a mirror image in the UK to do exactly the same to understand the net present value of future cash flows adjusted for their impact on the planet. And that puts the UK at a leading position compared to most other jurisdictions. So TCFD is now mandatory for listed companies and asset owners. Next week, we will be launching the Transition Plan Task Force outcome on how companies disclose their transition plans. The London Stock Exchange was very proud to support the ISSB in its launch of its Standards 1 and 2, which is again how you have audit and disclosure standards around the impact of climate change in terms of audit standards. The UK has integrated more of that into the way its capital markets function today than any other country. And actually making it and mapping it into the way it works is the first critical starting point. The next is you have to have good data, and that starts with having data standards, it starts having audit standards, and making sure that all of that is there and people have increased confidence. Actually, the confidence in the system, in the data standards and disclosure, is going up and up every year, every time we measure it. And to me, we then think about two different forms of financing tool. The first is how do we make sure that every form of financing that we facilitate on the stock exchange, so that is equities, funds, and fixed income, all have an equivalent, an appropriate market where they can identify the amount of the green economy that they're financing. So we have the green economy mark, which applies to listed companies and to funds. We have the sustainable bond market that has gone from strength to strength to strength to strength to strength. And we have, and that enables us to cover the full service of the existing flows of capital and how you understand their impact on the economy. I'll finish on one final point, which is actually to genuinely get to net zero, we need to understand and constantly be able to value that carbon impact on an ongoing basis. As we get closer and closer to the ability to do that, then value propositions will change. It's a proxy for a carbon price, effectively. And so we've just launched the world's first voluntary carbon financing market in the UK to actually finance more projects that will generate the funding into voluntary carbon projects that will enable us to offset more activity. So the UK right now is sitting on much more infrastructure to do this than any other capital market.
And Julia, just to follow up on that, is this being driven by investors, by companies? Is it you pushing it on to investors? Where's the push coming from here?
It's one of the most consensual ecosystem-wide things that I've seen, aside from, we were just talking about the Capital Markets Industry Task Force being the other, but actually companies are making an increasing amount of the FTSE 100 have made a science-based commitment to get to net zero by a certain date. We have regulatory change where there is consensus around that being necessary, and it's already taking place. The asset owners are pushing for it, as well as are the asset managers. So it's actually coming from all sides of it. If I had a plea, it's that the supportive ecosystem, be that audit capability or verification capability, is the thing that needs to scale at pace and to increase its upskill at pace. But everything else is actually in very good shape in terms of being there.
That's good to hear. So, Anand, until now, capital markets have been the preserve of the institutional investors. Tell us what PrimaryBid are doing to help retail investors access a lot of this green issuance. Are your investors asking you to get involved here?
Well, look, every time we launch a deal which has the green economy mark, we see significantly more take-up. So it's just there and evident in the market. And, you know, I think all this wonderful work that Julia's been doing, both at the LSE and then at CMIT and so on, is setting up this structure for companies like ours to innovate on, and, you know, within like wonderful guide rails, and then we can sort of have this quite nice feedback loop. I'll give you an example of a deal we did last week. So it was well covered in the press, so you can read about it. But it was Severn Trent. It's a FTSE 100 company, water company, raised £1 billion, and, you know, part of those proceeds was for sustainable reasons, you know, cleaning up pollution, etc. And, you know, they came to us and said, hey, you know, we'd love to enfranchise our community into that deal. You know, our community being our employees, our 8,000 employees, our existing shareholders, retail shareholders, but also the British public. And, you know, we want them to be part of this, this fundraise, and we were able to do that. Now that's an amazing transaction, entirely unique for the UK. I mean, I don't think that kind of deal can be done anywhere else. Now, we're exporting this technology to other places in the world, but for now it exists, you know, very well out. It's very well established here in the UK. But, you know, taking that one step forward, right now there's this arbitrary cap around how many individuals can participate, right? Up to 8 million euros. It's kind of a random number. And that's going to fall away next year. And what we found on our deal, you know, we had multiples of that number coming in. And, you know, so the community wanted to participate in this deal. The company wanted them to participate. But there was this legal barrier blocking them from doing so. It's kind of unnecessary barrier. And that's something we've been communicating, you know, with CMIT, with Julia, with the FCA. We actually just put in our you know, on the consultation paper, our view on it. And it's that ability to communicate back, give the data, you know, establish that two-way feedback that would, you know, change this thing. So hopefully next year and the year after, when companies come out and they want to do more green type financings and want to enfranchise their community, we can do that at a greater scale, and that's what I'm excited about.
So you're seeing strong demand from retail investors for these type of issues?
Absolutely.
And are you seeing that for equities, for bonds, for funds, for...
You got it. And I think that particularly now in this yield environment, you know, you're seeing it across all securities. So it's no longer just an equities thing. It's a fixed income thing. It's a sovereign thing. You know, governments around the world are issuing, you know, green bonds.
Yep.
And that's something that should be able to be bought by the public.
Okay, so we've heard that Julia's Exchange is facilitating green financing, and Anand is getting retail investors into those deals. Now let's hear from a FinTech that actually is going to be putting the money to work. So Hugo, tell us about LendInvest framework for green financing that you published, how you're planning to help the borrowers, and then how you're planning to finance it through your two fellow panelists.
Yeah, and I guess for full disclosure, I distribute bonds through Anand's platform. I list bonds on Julia's platform, and I've actually worked with Mike in the past on our Series C. But I will try my best to give a slightly different view, a slightly less, no offense, rose-tinted spectacle view, because I think actually the life of an issuer is very challenging, and I think often there's a very large disconnect with what happens at the policy level and everyone who's got really fantastic intentions and what you're actually capable of achieving on the front line. especially if you're trying to scale a business to a level that is, institutionally worthy. So LendInvest, and again for context, we are a tech-first mortgages platform. We serve in various segments of the mortgage market, so all the way from bridging finance, development finance, buy-to-let finance, and ultimately residential mortgages. We are a non-bank, so the way that we finance those mortgages is through the capital markets, effectively. And we've currently got about £4 billion under management. Towards the end of last year, we took what I would consider to be the rather ambitious step of trying to establish a green bond framework. I say ambitious because I think ambition goes hand in hand with being a fintech. It's one of the reasons why we're all here. And I haven't yet been able to actually issue bonds from under that framework because the interest rate environment at the moment is far too high to make it make sense. At its very core, that green bond framework is designed to align with a voluntary set of best principles set by ICMA, which is one of the kind of leading capital markets trade bodies in Europe. And they have social bond principles, they have green bond principles. This is a green bond because I operate chiefly in real estate, and I think the biggest impact that my company can make in terms of the climate goals, the Paris goals in particular, is around the decarbonisation of the UK's built environment. What I found, and you have to go through a very, very laborious process. It's in parts very tedious because you have to get a second party opinion. So you can't just go off, draft something, say it aligns perfectly with the ICMA Green Bond principles. You have to get an independent third party who, in this instance, was S&P, to basically check your homework and say, yes, we believe you are aligned in these 4 key areas. Those 4 key areas are around your use of proceeds, which in our example means we're using the capital we raise through green finance to either acquire energy efficient real estate, or we're using it to develop from the ground up energy efficient real estate, or we are retrofitting existing housing stock. There's also a second section around how you evaluate, how you select those green investments. There's a third section around how you manage those investments on an ongoing basis, and then there's a fourth section around reporting. You could, like I said before, you could have the best of intentions, but what you ultimately find is that when it gets back down to the front line, trying to structure products that fit with your ambition is incredibly challenging, and that's because there is a large asymmetry of ambition within these financing markets. And it's not going to surprise anyone here, the incumbent dinosaurs, aka the banks, are at the forefront of holding back that progress. No offense to any banks in the room. But if you're a property investor, and you take homes under the hammer, which is a very classic example, often these guys who are buying dilapidated property at auction, they can't go to the high street to raise the finance to acquire those assets. They have to go to specialist lenders who can give them the money within a few weeks' time to allow them to continue the acquisition, raise the capital to enhance it, and then ultimately exit. But as a capital markets reliant financer, I have to go with market rates. A bank, on the other hand, as we've seen through the last 12 to 18 months, have been very good at not passing on those higher rates to their savers and their current account holders, which has ultimately given them an arbitrage in terms of their cost of capital. If you were a property investor, why would you come to me and get financing at 12% with all of the bells and whistles around, I want you to report to me every 2 months on your progress that you're making around installing triple glazing, putting in your ground source heat pumps and whatever else, when you have the option to go to a bank and get a 7% loan and have no reporting obligations. That asymmetry is a big problem, especially given carbon emissions from real estate are, by most people's estimates, responsible for 20% of the country's carbon emissions.
Okay, so let me ask, so Julia, is it the case that the market is still nascent and that's impacting the volume of investment dollars available to come in, or what's the
No, I
status
think the
of the
point
market?
Hugo's making is one about the structure of lending and the underlying way in which a bank might lend using other parts of its balance sheet versus a wholesale funded lender. Now, there are challenges in any market, which is the way you enable markets to transact at pace and at scale, is you have as much standardization as possible. There is no doubt about that. But I think green bond frameworks have actually grown up to enable people to structure it the way they want to. And I think that's actually exactly what Hugo's done. Yep. The challenge in this environment is, and I would think about it through a different lens, which is if you get to a world where every asset owner and manager actually has to think about the environmental impact on their book in a consistent fashion, then that arbitrage that Hugo's talking about would be much, much harder to produce. Because you may have the differential in lending, that's just because the balance sheet's funded at a different rate, but the differential in responsibility wouldn't be there. Now, that over time, as we get closer and closer to 2050, is actually what having dedicated transition plans and TCFD mandated, not just for issuers, but for asset owners as well and managers, means that actually banks increasingly will have to start being able to account for the transition impact of everything on their balance sheet. Now that will pass all the way down through the system. And that is the most transformative thing. That was only introduced as the beginnings of a concept at COP 2 years ago. So some of this is the first mover advantage or otherwise of the evolution of the responsibility of the entire ecosystem, I think.
Can I just quickly add to that, just as a live example, because I do agree, and I actually hope at one point in the future all of the need for these frameworks will ultimately disappear as the world just becomes a slightly more conscious place to live and work. But in 2021, when I was issuing literally hundreds and hundreds of millions of securitization bonds, investors in a low interest rate environment basically had nothing else to care about because interest rates were low, so the probability of default and loss given default, all of these things were very, very low on the agenda because the assumption was my mortgage borrowers were going to repay their loans, everything's hunky-dory. Moving to 2022, you have Putin invade Ukraine and kickstart a chain reaction of basically inflationary exacerbating events, which meant that actually now what's top of the agenda for investors at the moment is, well, I know you can deploy my money, but can you get it back to me when I want it as a result of these high interest rates? And on road shows, I think on a roadshow that I had last year and a roadshow that I've had this year, ESG and decarbonisation barely featured in the conversation when 2 years ago it was 50 to 75% of the conversation I was having. And it comes back to the point around policy evolution, but in order to have a successful, sustainable evolution of policy, we have to also look to our policy setters, namely the government, who very recently have made some very interesting remarks in terms of their commitment to the climate agenda.
You know, look, can I just say, let's not forget that this rapid increase in interest rates, I think in the history of capital markets, we've never seen it. Like, it's just gone so we're actually living in an unprecedented world, and we're talking about bonds, which are, directly linked to the interest rate. So I think, Hugo, firstly, I think you're far ahead of your time in terms of doing this thing, and the rest actually do have to catch up with you. But I wonder if you were doing it 3 years ago, where the delta would actually have been a lot smaller, and you probably would have been successful. I don't know is the answer, but I wonder. But now you're just at a point where everything is completely new to everyone. The banks haven't caught up because they don't need the deposits just yet. Governments are issuing bonds directly to the people at rates higher than a bank saving account. It's totally bizarre. And so, of course, there's going to be some disruption, particularly if you're doing it right now. And do you feel that paradigm shift?
We're always trying. Come back to your point around what would happen 3 years ago. Well, 3 years ago, we would have just ended up paying for it out of our pocket because investors aren't yet willing to pay the premium to take the exposure to more green and sustainable assets. And it's actually very difficult to work out. Take securitization as an example as a very scalable source of DCM type capital. There are issuers in Europe who will have securitizations which are green and securitizations which are non-green. The pricing on the two transactions will be very, very similar, and the incentive almost is not there.
So half a minute to wrap up. Looking forward over the next couple of years, what's the one thing that each of you would like to see happen or might actually be coming down the track that's going to help here? Anand, what's the one thing you're looking forward you'd like to see?
Government green issuances directly to the public globally.
Government green issue.
Yeah,
Julia?
that would probably be on my list as well. But I'd also say we need to scale the verification and the audit capability at pace, because the need to verify this and maintain confidence in the activity that is taking place is critical to this scaling.
Thank you. Hugo?
Where do I begin? I think, I know we're over time, but I think what Boris Johnson did with the minimum energy efficiency standards with respect to real estate was basically set the hairs running, and as a result of that, no one was prepared, and there are now a whole host of key stakeholders in that ecosystem who, I wouldn't quite call them climate change deniers, but they're very skeptical and no longer have the motivation to try and make something work. So I think what I'd be looking for is policy that can survive short-term political decisions and ambitions and set the framework for the future.
Okay, thanks very much. Well, hopefully everyone's learned a little bit about what's happening in the capital markets to help green energy. If you can give a round of applause to my panel, please.